Hello, everyone. My name is Moe and with me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for education and informational purposes only. Investing comes with a lot of risk, and to read more, you can see the description below. Over the last 1 year, consumer sentiment has collapsed. If you look at major indicators that track consumer sentiments, they have dropped significantly. Few of the biggest reasons include inflation. People have this idea that bad things are coming. So, it's impacting how they think. And when you have consumer sentiment collapsing, investors like to stay away from discretionary stock. Discretionary stocks are essentially companies that make things that people buy when they want it rather than they need it. Now, John, recently you profiled this company called Camping World Holdings. They are listed on New York Stock Exchange under symbol CW8. What's happening? Why are we looking at this right now?
Camping World Holdings is as you said, consumer discretionary stock, but they seem to be doing everything right. And because investor sentiment, though, it hasn't been baked into their share price. So they're reporting strong financial results, they're raising their dividend, they're announcing strategic acquisitions, providing solid guidance. Everything you need to do well, but investors just aren't rewarding the stock yet. To me, that's like the great foundation of looking at a stock that everyone else is ignoring. That's why it's a good time, I think, to look at Camping World Holdings. Yeah. Okay. Again, its stock is down 12% year over year, which isn't the best thing to be looking for. But again, underlying principles are that has nothing to do with what's going on at Camping World Holdings. It's doing everything it can. It's just broader investor sentiment, and fears of a looming recession kind of thing that's holding it back. But Wall Street doesn't really care what people on Main Street think. It's expecting the company's share price to climb anywhere from 30% to 58% over the next 12 months, from $28 per share to $34 per share.
Wow. Why so much bullishness over this camping company?
Again, they're reporting strong results. And that's not just like a one-off. Like the entire recreational vehicle industry remains exceptionally strong. Every year it generates 140 billion in sales here in the US. And on top of that, sales between 2021 and 2022, it jumped 16%. And there's other metrics that show that investors shouldn't be afraid of some consumer discretionary stocks like Camping World Holdings. For example, 11.2 million Americans, households currently own an RV. An additional 9.6 million said they expect to purchase an RV in the next 5 years. And according to a survey conducted by the RV Industry Association, 31% of their respondents are first-time owners, which emphasizes the rapid growth of the industry in recent years. So there's lots of dynamics that are going on in the entire industry that should, I think, be a reason to attract investors to companies like this, to at least do their own due diligence.
So much demand. How are their financials looking now?
Really good. They're actually America's largest retailer of recreational vehicles and related products and services. The company currently operates 200 retail locations in 42 states. It also provides roadside assistance plans, property and casualty insurance programs, vehicle financing, extended vehicle service contracts, service assistance programs. It also has its own Good Sam Club membership and co-branded credit cards. And I think it currently has 5.5 million active members. So it basically does everything from when you walk in the door to you buy your new or used RV. They can help redesign the interior. They can help finance, repair, everything. If it breaks down, come and pick you up.
That's good to know. And you had also previously mentioned that they had done some acquisitions as well.
Yeah, to maintain your number one position in America in any industry, you have to expand your operations, and they do this through organic growth, but also through major acquisitions. And in March, April alone in this year, they've announced 6 big acquisitions, including 2 acquisitions in California, which brings its total location count to 21, which solidifies its position as the number one retailer in California, which coincidentally is the state with the highest RV sales. Recent acquisitions also solidify its number one position in Oregon, Arkansas, Utah, and added to serious market penetration in Michigan. And those are just the acquisitions announced in the opening months of 2023. In 2022, in May, the company announced the purchase of Richardson RV Centers, which was the largest acquisition in the company's history. So they're growing on leaps and bounds.
and they're significantly active. And is all this activity, all this demand, is it showing up in their financials?
Oh, absolutely. The company continues to report like strong results. It's just not baked into their share price yet. In 2022, revenue, it only inched up 1%, but it still came to 7.0 billion. Used vehicle sales increased 11.3% to a record 1.9 billion. And new vehicle sales came in at 71.4 million. So pretty strong numbers. And the company also reported full year net income of 351 million, worth $3.22 per share, which of course is more than enough to help pay for its high yield dividend.
And then now you said it. So what's happening with dividends here?
Yeah. The company's share price might be down, but the high yield dividend is like what attracts people to companies like this when times are volatile. Like it helps them ride out uncertainty. So as of April 14th, the company provides a cash dividend of 62.5 cents per share, or $2.50 on an annualized basis, for an inflation crushing yield of 11.8%.
Wow.
That's not just a strong dividend, that's better than anything its peers are throwing up. So for example, Harley Davidson, New York Stock Exchange, their ticker is HOG.
Yeah.
Its shares are down 1% year over year, a little bit better than Camping Holdings, but its annual dividend is just 1.77%.
Right.
Another big difference is Harley Davidson cut its dividend payout during the pandemic from 38 cents per share to just 2 cents per share. And while it's increased then to 16.5 cents per share, that's still way below the pre-pandemic levels. Camping World Holding Inc., on the other hand, has increased its payout a number of times since the stock market crashed in February, March 2020. So I think it can afford to raise it again because the payout level is just 77.6%, which is well below the 90% threshold we can stomach.
Right.
So that gives them more than enough financial wiggle room to, if they wanted, raise their dividend again in the coming quarters.
Right. John, thank you so much for talking about Camping World. When I look at it, it's one of those companies that are, everyone is so pessimistic on discretionary spending stock these days, but this is one of those gems that, you like to find, and companies that are doing well. And if economy starts to improve, consumer sentiment starts to improve, this stock could be one of the outperforming stocks before any other stock in the similar sector. Thank you for watching our video today. If you want to learn more about John's ideas, you could go to incomeinvestors.com. We have other videos as well that you could look at. Previously, we've profiled several stocks that provide double-digit income. And in the meantime, like our video and subscribe to our channel.